Dear friends, welcome back to Shasha's virtual classroom. So, let us discuss activity 6.2 today. State which of the type of errors each of the following represents. A customer's invoice has been omitted from the sales journal. So, we need to mention the type of error. So, we need to write the type of error here. So, before this, let us have a recap of what type of errors and what are the different types of errors. So basically, there are 6 types of errors that can occur when debit and credit totals in the trial balance agree. They are as follows. So type of error of omission. What is error of omission? A financial transaction omitted completely from the books of omit. Okay, omission is nothing but omit. Omission is nothing but omit. So the name itself suggests. Okay, so omit. So omit. So omission. So omitting means leaving out. So financial transaction omitted completely from the books results in there being neither a debit nor a credit entry for the transaction. This could happen if a transaction is not entered, not at all entered. Okay, so not entered in the book of prime entry. So the entry itself is not recorded. Not recorded. You have purchased, but you are not recorded. You have sold, you are not recorded. So expense you incurred, we are not recorded. So that is what example is $100 of equipment is bought for cash. The transaction is forgotten and not entered in the equipment or the cash account. It is not recorded at all. So there is no debit and there is no credit. Okay. So the next one. Error of commission. Error of commission means you are giving something more. So commit. Okay, you are giving something extra. So here it is omit. You are leaving out. Leaving out or skipping. So here it is. You are giving some extra. A financial transaction is posted with the correct amount to the correct side of the wrong account. Okay. So what you have done, you have posted, but you have corrected, you have posted it to the correct side of the wrong account. Account is wrong, but the account is in the same class. Account is in the same class. So the payment for stationery is posted to the advertising account. Instead of treating it as a stationery expense, you have treated it as advertising. So both are expenses. Stationery and advertising are both classed as expenses. So same class. Okay, so this is very important. Same class. So expense or revenue or asset or liability, whatever. So it is the same class, but instead of posting to one account, you have posted to some other account. So that is extra you have put in some other account. Error of principle. What is error of principle? So you can so you don't know the accounts. Suppose someone doesn't know the accounting principles. Doesn't know the accounting principles. Ignorant. He doesn't know the accounting principles. So what he does, instead of recording it as an expense, he may record it as an asset or something like that. For example, a financial transaction is posted with the correct amount to the correct side of a wrong class. It is wrong class. For example, they have done, see, payment for fuel for a vehicle has been debited to the motor vehicle. So fuel for vehicle is a nominal account, debited to the motor vehicles account. So it is an asset account. So basically, revenue has been treated as capital expenditure, and capital expenditure might have been treated as revenue expenditure. Instead of the motor vehicles running expense account, motor vehicle expenses are classed as expenses, while the motor vehicles are non-current assets. Okay, so it is wrong class, ignorant. So what has happened? The person doesn't know where to record. Instead of recording in fuel for vehicle, he has recorded as motor vehicle itself. So that is wrong. So ignorant means he has not followed the accounting principle, has not followed the accounting rules. Rules are not followed. This is same class. Okay, next one. Error of original entry. So what is error of original entry? Original entry. So at the time of recording, the first time. So wrong amount is entered in the book of prime entry. So what is book of prime entry? You record it for the first time. So there itself you have written it wrong. So wrong amount is entered in the book of prime entry for a financial transaction. A purchase invoice is entered on the purchase journal as 10. See, it has been entered, but the amount itself is wrong. At the time of entering the amount is wrong. So original entry means book of prime entry. So first recording, first time recording itself is wrong. So next, complete reversal of entries. Complete reversal means instead of debiting they have created, instead of creating they have debited, something like that. Okay, an account that should have been debited has been created, and the account that should have been created has been debited. So a payment made to Sam is debited to the bank account and credited to Sam's account. So a payment made to Sam is debited. Actually, it should be credited to the bank account and credited to Sam account. It should have been debited to Sam account, because it is paid. See here the accounting principles. So whatever we have learnt in first lesson, so cash transactions and credit transactions, you have to apply here. So if you have not understood there, here also you will not understand. So be careful. Okay, so your concept should be, it should be logical flow of concepts. It should be logical flow of concepts. So if you understand, if you have understood everything before this, then even this you will understand. Otherwise you will not understand this. So please don't try to try shortcuts in learning. Never learn shortcuts. So a payment made to Sam is debited to the bank account and exactly reversal, complete reversal. It is complete reversal. Okay, it is complete reversal. Instead of debiting, you have credited. Instead of crediting, you have debited. So compensating errors. So what happens sometimes? Errors will offset. So and then net off. So the compensating errors. So compensating means one will offset the other, so that there is no proof at all. So compensate. They compensate one another. So two or more accounts that cancel each other out. An invoice of 1200 in sales journal is posted to the customer account as 1000, and the same amount, the sales journal, is underadded to low by 200. The debit balance on the customer's account and the credit balance on sales account will both be underadded by 200. See what has happened? 1000, instead of adding 1000, instead of writing 1200, they have written as 1000. And what has happened? One place they have written as 200, and the other place they have not written it. So because of that, they cancel out, and the net effect is nil. So the debit will be equal to credit. So ultimately, what it is told here is they cancel out. Simply they cancel out. Okay, so they cancel out, and the error is not at all evident. Okay, error is not disclosed. Error not disclosed in trial balance. They offset each other. One error offsets another. One error offsets another. So two or more errors that cancel each other out. Okay. So this is what you need to know. So first you need to understand this. Then only you should do that problem. So now, having understood that, now we will discuss here. Okay, customer's invoice has been omitted from the sales journal. Omitted. Error of omission. Simple. A purchase of goods for 100 has been entered in the purchase journal. So purchase journal, original entry, because first as soon as we purchase, we record in purchase journal. So original entry, purchase of goods has been entered in the purchase journal. So it is error of original entry. Next, discount received from Mari has been debited to Maya's account. So what has happened? We have received the discount, and it should be credited or debited. Yes, it should be debited. Discount received will be debited to one person. What has happened? Instead of debiting one person, it has been debited to another person. So it is error of commission. because you have given credit, you have given debit to Maya instead of Mari. So you have debited, so it is correct. You have debited to, instead of one person, you have debited to another person. You have just given more, whatever, whether it is debit or credit, you have credited to one person instead of the other person. So it is error of commission. Payment or advertising added to the bank account and credited to the advertising account. So what will happen? Payment of advertisement account has been debited. So it should be debited or credited? It should be credited. It should not be debited. Correct, no? So because money will go out from bank and credited to the advertising account. So it should be debited to advertising account. So it is complete reversal. Error of complete reversal. Entries were 100 too high overadded on both the heating and lighting and the sales account. Okay, see, heating and lighting is expense. So expense has increased. Expense overadded means expense has increased. So sales account, income also sales account. So income also has increased, overadded. Okay, both are overadded. So expense is debit, sales is credit. So what will happen in this case? This is overadded, this is also, so debit is also increased, credit is also increased. So it will offset. So it is compensating error. Compensating error. So next, entries 250 were too high, overadded on the heating and lighting. So expense. So overadded to the heating and lighting, so expense has increased, debit. And 50 too low, underadded. So expense, again it is expense. It has been underadded. So it has underadded and it is credit. That is also debit. So that is also debit. So this is also debit, that is also debit. Instead of instead of adding it to heating and lighting, it has been added to rent payable account. Both are expenses. So instead of adding one to another, it has happened. So it is compensating because both are compensating. There is net effect is nil. Expense will increase, expense will come down. Instead of adding this account, it has been added to this account. That's all. So the purchase of office furniture has been debited. So error of principal. Okay, office expense. The purchase of office furniture has been debited to office expense account. So it should have been debited to office furniture, but has been debited to office expense. So principal, error of principal. So the rule has not been followed. The person is ignorant about the rule. So rule has not been followed. It is error of principal. That's all. So this is end of activity 6.2. So this is a very important topic. So you have to be very thorough in this concept, because this concept again we will discuss in suspense accounts. So where you will have to pass journal entries and suspense account to nullify, to rectify the suspense account and all those things. So this is very important lesson. It will actually break your head if you don't understand this concept. So try to understand this concept very clearly. Be thorough in this lesson. It's very important, particularly errors and how they are passed. So unless you know how to move forward, you don't know how to move backward. So moving forward is first thing you have to know, then moving backward. So that is why a lot of students, they struggle near the exams. They struggle because nothing will enter into their head. So students should start learning from the day one, so that they don't struggle near the exams. They have to struggle from the beginning, not near the exams. So ultimately the end result will be 0. So never do that.